Well, I went and did it. It's Friday, and I'm red. You gotta love a good Red Friday. Today, breaking down some trades that I made, talking about what went on in the market today, something that I did wrong. I made a big mistake. I broke the rules, baby. I broke the very, very important rules that I talk about all the time here on the channel and everything like that. So let's talk about it. You break the rules, you make bad choices, you get bad results. Showing you guys what went down right here in this video, so make sure you stay tuned. What's going on, guys? Patrick here. Today, showing you the good, showing you the bad, showing you the green days, the red days, right here on the channel. If you guys are new to the channel and you haven't already hit that subscribe button, make sure you hit that subscribe button and the like button. Let's dive into what went on today in the market and how I'm red on a Friday, which is my worst fear. Not even a fear, but something that I just never really want to do. I don't like to go into the weekend on a red day. So pulling out the chart here today on the SPY, this is what I've been focused on, trading options on the SPY. And as you can see, I'm sure you can probably see what went wrong, where it went wrong, and how it went wrong. And basically, we had the SPY make this big move up this morning off of that 450 area. I ended up buying the 452 call options, and we had to push all the way up there to 453. I ended up actually making money. I was up $257 on these call options right here on the push up to the 453. And then some news came out about a missile strike in Saudi Arabia or somewhere in the Middle East on a oil refinery. Who knows what really is going on anymore. But the news came out and we got this massive drop, and that's exactly where everything went wrong. I'll show you guys what went wrong here. So pulling up the Interactive Brokers platform, this is what I'm using day to day, the desktop platform. This is the broker that I'm using every day on my phone, using it on my desktop as well. Trading options, buying stocks, crypto, and all that fun stuff. So right now you can see, what are we looking at? We're looking at the 450 call options. I ended up losing money on the 453 call options, and I'll show you what went on here. Basically, we had this big push up to the $1.15 area. We had this pullback here. I was thinking we were going to bounce off of this level. If we go to the 15-minute chart, you can see, thinking we were going to kind of bounce off of this 451, 452 level, and we were going to kind of hold this EMA right in this level. And well, you can see we just got washed. Now, the problem here is I was looking at the 5-minute chart, and you can see this blue EMA right here, this blue EMA line. I was, maybe I was a little over bullish, or I thought that this was going to bounce more than it, well, obviously it didn't bounce, but I was thinking we were going to bounce off this overall blue EMA line right there. This is the Ripster EMA clouds, and we're going to bounce off of that and then rip up to this level. And well, obviously the problem there is, well, it didn't do that. You can see it did get a little bit of a bounce, but those options got murdered. And well, what did I do? I ended up averaging down, thinking that I could average down, get a big position, and then get that big squeeze back up to the 453 level there on the SPY. So that was my big break, my big rule break of the day. Breaking rules normally end up with, well, you losing money. There will be days where you break a rule. Maybe you hold a stock longer, you don't get out, you don't stop out. Maybe you chase a stock and you end up making money on those days. And it happens, right? Like everyone has those days where you break the rules and you still make money. But in the long run, in the overall picture, the more and more that you're breaking the rules, the more you're setting yourself up for failure. And that's exactly what I did today. So I ended up buying these call options here when it was 87 cents. Yeah, so I paid 87 cents when I bought these, and you can see they ran up almost 100% up there to $1.75. I ended up taking profit there at the $1.40, $1.30 level. And well, you can obviously see that big, massive move, and you can see right here. So buying here at 87, 96, 94, 89, and then selling $1.31, $1.34, $1.50, and then $1.59 there on those options. And you can see it ran all the way up here to $1.75. So we are loading up on this bounce right here off of the EMAs. I'll show you on the chart. Look at, you can see some indecision here. We had like almost like a doji, another doji, and then we had that rocket ship up to the 453 level, and that's when it ended up taking profit on those 452 call options. Now, The issue, like I said, is on those 453 call options. You can see if I pull up here how this all went wrong. So I'm buying here at the 85 down to the 50-cent area. I ended up having to get out there at the 30-cent level. Now, the thing about this, obviously, is it went all the way down to 12 cents. So I had to cut it off at some point. I was basically watching this 50-cent level, and it ended up just dropping right through there. And I had to get out for a loss there on that trade. You know, it's just kind of like how it had to go. And you can see I ended up losing $338 on these 453 call options. And obviously that ate into my 452 call options here that I locked in $246 on this. So I locked in $246. The thing about this is I was only trading, if you look, I only bought what, 1, 2, 3, 4, 5. My maximum, you know, buying for these options, my trade, my plan right now, or my rules is 5 maximum options that I can buy at a time. That way I'm not loading up on, you know, 120 or I guess 10, 20, you know, and averaging down massively. So you can see how this one worked out perfectly. The trade worked out perfectly. The overall game plan was good. I had the 5. I ended up taking profit, you know, cleaning it up as we went higher. And then you can see the options on the 453s. You know, I bought like so many. I think there was a total of, I think what? 1, 2, 3, 4, 5, 6, 7, 8, 9. You know, so that, again, what that does is it affects my emotion because I've now sized up. I've got a larger size. I'm basically at that point just hoping and praying that this thing is going to bounce back and I'm going to be able to get out for a profit or get out for a break even. And that's exactly when you start going wrong. That's when I start going wrong, and I know that, and I have to be aware of that, and I have to stick to my rules. Even when you think like, oh, I can break a rule sometime, like I said, you know, breaking the rules ends up normally putting you basically where you don't want to be. And well, today I don't want to be where I'm at, and that's red on the day, especially after being up $250. I mean, come on, guys. To be up $250 on the day, have an really easy trade right out of the open, and then to have to walk away being down $200 after commissions and fees, I mean, that's just not how I want to be ending the week here. Overall, I'm still pretty, you know, feeling good about it in general because of a couple things. Now, one thing I do want to show you is I think this might be a really good kind of example as well, right? So I was buying these call options, these 447 puts. I'm buying these puts down at the 47-cent level down here when we were bouncing off of that. So we're buying here, and look where these things ran to. They ran to 95 cents. So I'm buying at 47.47, and I end up selling at 62.53. I think my total on that was like $47. But you can see how insane that move was. If I would have just been a little bit more patient and gave it more time, especially the way that the SPY was looking at that point. You can see here on the SPY how it's just been getting murdered. So I was buying those 447 call options as we are breaking below 450 there. We had a low of all the way down there at 448.49, but you can see obviously that massive move to the downside there. So I was on the right side of the trade, but just not having the patience, not letting it all work out and really capitalizing off of that move lower and, well, kind of just switching and swapping and all that stuff. So the moral of the story today is very simple. Number one, I know that Friday can be very volatile. And then I also know that, you know, historically for myself personally, that Friday a lot of times ends up being red days. As bad as that sounds, I normally have red days on Friday. I normally have, you know, good weekdays, and then on Friday I end up giving us a profit because I think I maybe end up forcing myself to want to like really capitalize on some big gains. The problem is, you know, I was up $250 and I could have easily just walked away right then and there, but, you know, I saw some opportunity. I thought there was opportunity there, obviously, and well, it didn't work out in that manner. And what's so interesting with day trading is it's a cause and effect, right? If you make a bad choice in that moment during that trade, there's obviously no going back. You're either hoping and praying at that point that the stock goes back up higher, or you end up getting out for a loss, and it's just kind of the way it goes. So, you know, every decision that you make trading ends up having a direct correlation or a direct effect on your P&L. And it's very interesting, I think, for me personally to kind of see, you know, like, hey, look, I have these rules. I've made these rules for a reason, right? I know why these rules need to be here. I know why I'm forcing myself to only allow myself to trade 5 trades. Or, you know, I know why on a Friday, if I'm up $250, I should probably walk away. I should take that money and walk away. Remember, like I said before, small gains add up. You make $250 every single day trading. I mean, you're killing it. You're doing it better. You're doing better than 99% of the people out there that are trading in the markets today. So if I can just focus on the rules, I know the rules, I know why I need to focus on the rules, and I know what I need to do, this shouldn't ever be an issue. But obviously, I'm a human and I have emotions, and that's part of trading. I also got the hiccups. So very interesting. That's one thing I love about trading is it's obviously the emotion. It's a technical side of it. It's the mental. It's, you know, it's a battle. And you are basically battling not the market, but really you're battling yourself. I mean, the trades that I lost money on today were not because of the market by any means. The reason that I lost money today was because I chose to break the rules. I chose to make a bad trade. I chose to really size up into that trade, averaging down. Remember, averaging down, sizing up above my, it was all bad. There was no setup there. It was just a bad trade. And well, I ended up paying the price today. So the good thing is I was able to cut it off. I wasn't stubborn to the point that I held it for a massive loss. You know, the worst thing I could have done is let it turn into a $500 to $1,000 red day. But I guess the silver lining here is that I was able to lock it down or cut it off at $200, and I'm going to be able to walk away. I'm not going to keep trading. I'm not going to overtrade. I'm not going to try to get back to green. I've done that a million times as well. It just never really works out. You end up going from red to green and then back to red, and before you know it, you're down $600, $700 instead of only being down $200. And that's just not something that I want to do today. So if you guys haven't already, do me one favor, hit that like button, subscribe, and all the buttons down below. I will talk to you guys later on.